Here with Visionary Wealth Advisors, and now that the tax season's over, I thought it'd be a good idea to bring a CPA in to talk about the changes and just see how individuals can prepare for next year. So I have Brian Toennies with me. Brian's a CPA who has his main office in Sunset Hills. He's been in the industry for about 21 years on his own, has 14 employees, and really helps individuals and small businesses with tax planning and tax preparation. So thanks for coming, Brian. I appreciate it. Yeah. Another strategy that I've been implementing for some clients is donor advised funds. So if you wouldn't mind just kind of explaining what a donor advised fund is to everyone.
Sure. My view of the donor advised fund is basically an account that you have control over. You put your cash or your appreciated stocks into the donor advised fund, and at that time you get a charitable contribution. And then over time you can pay out of that account or that fund to your specific charity. So the benefit is, let's say you typically give $10,000 a year to charity. There's a good chance you're not itemizing your deductions if you don't have a mortgage especially, so you're not getting any benefit out of that. So what you'll do maybe one year is you'll contribute $30,000 or $40,000 to the donor advised fund. So that puts your itemized deductions up where you're getting enough to itemize. And then over the next 3 or 4 years, you pay out of the donor advised fund. So you're giving to the charity like you normally do. You're just bunching your charitable contributions in 1 year. So 1 year you have a large itemized deduction, and the next year your itemized deductions are maybe $12,000, but you're still able to deduct the $24,000 standard deduction. So over a period of time, it gives you much more deductions to claim.
And it's funny they use that $10,000 example, because there is one client in particular that I'm thinking of that they make $10,000 contributions that's in their budget, and with the new changes, they're not going to be itemizing going forward. So we decided to put $50,000 into a donor advised fund. Over the next 5 years, they're going to make $10,000 in contributions annually, as they've always done. But for this year, or I'm sorry, it was for last year, they were able to itemize. And then next year going forward, they're going to get the standard deduction, which they were going to get anyway. So it really helped them tremendously in able to do that. And again,
they're probably saving $7,000 to $8,000 of tax that year, depending where they are.
In that 1 year, yeah. And again, while they're very successful people, they don't make millions of dollars. So again, this is a strategy that many individuals can use. One thing I wanted to say is that Brian and myself do not know you, the individual watching this. So anything that's said today should not be considered advice, either from Brian or myself. We don't know the ins and outs of your situation. So we hope you enjoyed this video, and have a great day.